Hey guys, welcome to the prelude for episode 10. We're already at 10 of Invest with Instinct, and this is another mindset performance coach interview that I did with my previous mental coach in trading, where I learned a lot about myself, how to think about things more in the present moment, how to check in with myself, and how to best operate under pressure. It's a really informative, cool chat that goes in a bunch of different directions. So enjoy. It's with John Burns, who works under Denise Shull in the Rethink group. And look, if I've ever made a good interview that gave you some value, just please do me a favor and just repost this. I'm just trying to grow this a little bit so that I have a little bit of the ability to reach out to people and get some more guests on that are interested in getting their name out there. So I'd really love that. Otherwise, enjoy the episode. All right, guys, welcome back. We are at actually episode 10 now. It's going fast, but getting a lot of people that are willing to come out and chat about mindset, trading, poker, investing, all sorts of stuff that I'm interested in, and the conversations have been great. This one's fun for me. It was I still don't know how to describe you exactly, but it was like I like to say like a mental coach for me in my trading. He works for the Rethink group. He's been doing that quite a while, and he's also got a long track record of trading himself. So, John Burns, welcome to Invest with Instinct, and round of applause, everybody.
Hey, thank you very much. It's great to be here. Thanks for having me.
Yeah, so if you want to give people like a 30-second explanation of who you are, what you do, and then we can go from there.
30 seconds may not be enough. No, I'm just kidding. I'm a mental skills coach. I help people make better high pressure, high consequence decisions in investing, trading, and professional sports. I've had the opportunity to work with some amazing people and learn a lot from them. And so, quick background, I started on the floor of the Chicago Board of Trade in 1989. And that was a summer between my freshman and sophomore year of college. And I continued to go back because they didn't kick me out. And then, well, first of all, the first day I was on the trading floor, I was following a runner in to tell me how to get orders into the bean pit. And I was in the bean pit right as the market opened. Bell rings, chaos ensues. I had goosebumps, and I was like, this is what I want to do. This is it. And so I spent the rest of my college career trying to figure out how to do that. And then I was able to get a job after college as a runner, and then got with a proprietary trading group and traded feeder cattle options from like 1994 until on the floor until 2015, maybe. And as part of that journey, I worked with Denise Shull, who's the founder of the Rethink Group, for my mental skills. Worked with her on and off for about 5 or 6 years. And she said, as I was transitioning off the floor, as the floor kind of died, feeder cattle kind of went away. The options market, at least it was at the end, it was guys like me trying to pick each other's pockets. And that's no fun. That's not a game that anybody wins in the end. And so I transitioned off the floor and worked with Denise as a part of that process. And, kind of as I was doing that for a while, she said, you'd be really good at this, helping people with their mental skills. And she said to take classes in modern psychoanalysis. So I've been doing that since 2015 or 16, about a little over halfway through a master's program, which I'll just keep taking classes because I'll learn a lot. And we kind of combine the latest neuroscience on decision-making and techniques from modern psychoanalysis to help our clients kind of do more of what they want and less of what they don't. So
that's great. I had a great experience doing it. I think we chatted for, 4 to 6 months every other week or so. And it definitely made me think about things, quite a big pivot in my approach to checking in with myself, I should say. And it was really cool. I have a few things that I still just to this day use. I'll touch on those later. But you mentioned, you've been doing this for a long time. Do you feel like in the current regime, the way things are moving these days, Do you feel like it has any sort of similar feelings to any other era of yours? Like, there's been a ton of comparisons to like 2008 and 2000, but like, different times, there wasn't as much electronic stuff going on. So like, do you sense any consensus similarities when it comes to the way of thinking? Or are they just kind of completely on their own individually?
Mm, good question. It certainly feels like something could happen in the near future. There's certainly some kind of shock waves that kind of feel like they're happening. I don't know what that means, but I'm preparing myself kind of portfolio wise to be open to that happening. I think it's different because there's a lot of money out there. I think there's a lot on the sidelines, and we've gone through an era where you buy every dip and things are great. And so I think oftentimes it takes a while to clean those types of thought processes out of the markets in order for there to be a correction. And then things kind of reset. I think the biggest example of this is these zero DTE options, right? Like,
Mhm.
to me, it sounds a little bit crazy, but I mean, people are making lots and lots of money doing it. Now, from a hedging standpoint, um, if you're a big ETF or a big hedge fund and you want to hedge, I can understand doing that on the zero DTEs at times because it saves you money over the quarterlies, from what I understand. I haven't taken a deep dive into it, but I think there's a lot of people out there who are in these markets in various different places that um, have seen one market type and don't have a lot of experience. And so to me, those are kind of, and the undercurrents of, you know, the political environment, um, the war stuff, geopolitics. It seems to me that that's a combination that can kind of wreak some havoc. Now, again, I'm not calling for Armageddon. Like,
Mhm.
things could happen and the market can have a big retracement of 10% or so, and then who knows what happens. But I think there's a lot of kind of status quo thinking going on right now.
Yeah, and like, we had maybe talked about it, like, I just feel like the normal person, this goes back to the passive flows type of thing that we've seen since like whenever early 2000s, is like
Mhm.
the standard person hasn't really had the tough decisions yet,
Mhm.
right? And when they have had tough decisions, potentially they've been solved for them quickly. So like take COVID for example, the
Yeah.
markets did go down 30%, everything was a liquid, the world was ending. But like, I don't feel like random Joe had the time to start asking the proper questions to be like, what should we do here? Like they, by the time they had a sense of what was even happening, Fed steps in, markets ripping, and like they kind of could have been like, oh, okay, like, haha, just another thing.
Yep.
So what one quote I keep hearing recently that's like really sticking with me is that you can't destroy risk, you can only like transform it, right? So like the risk is somewhere, like the
Yes.
zero DTE thing, right? Like it's working for a lot of people and it might actually be more efficient than people think. At first everybody thought this was going to blow up the market somehow, but like
Mhm.
maybe not. But maybe the risk is kind of removed from there and put somewhere else, but we just don't know where it's like energy or matter or whatever, right? It's like it
Yeah.
can only be transformed into a different state. So it's really interesting to start thinking about like, okay, well, where is that release valve, right? Like maybe
Mhm.
Japan's a good example with their
Mhm.
currency. Like maybe if somebody had been thinking about that, they were able to just buy the yen, short the yen, and just make a ton of money or whatever because they knew that the risk was like um going there. So it's
Mhm.
tough for me though to think where is that risk now, and is it, yeah, like they've been learning from their mistakes too, right? So each
Yeah,
time we
that's
have like they're just putting in more defense mechanisms to
mhm.
help it not happen. So it's like it's as a trader. especially a short-term trader, like it kind of forces you to maybe be biased bearish often. And I'm trying to like step back and think more about, the possibility. Like, history is important, but also what we've learned and how we've changed things is important. I
Mm-hmm.
don't know. It's really confusing, but
Agree.
yeah. So it's good to hear. Good to hear that other people are confused too. Personally, but like the markets are kind of showing that, right? They kind of
Absolutely.
they look confused in a way.
Mm-hmm. Mm-hmm.
Uh, And like we were saying just before I got on here, like I feel like right now, which is October 20th, like the market has some speed wobbles here. We're in the quarter that's supposed to be seasonally strong. We just had this OPEX squeeze, which is supposed to be strong.
Mm-hmm.
The market's just going down. We're breaking some important levels. Gold is ripping above 2000. So like you get these kind of weird things
Yeah.
happening. But also, so bringing it back to like the mental game is like, normally I'd be getting a little excited, and this is coming from time in the seat, which I would like you to pop in for as well. Like, I'm not forcing it yet. I'm trying to let the game kind of come to me. Like, I think we both know that it'll become more obvious that the game's getting easier, rather than trying to like front run the game being easy.
Mm-hmm.
So is that
Mm-hmm.
something, because I know you've stepped back into trading a little bit yourself. Is that kind of how you're positioning yourself around these things? Like, yeah, you're maybe like moving some things in your portfolio, but you're also thinking of like, I don't want to force anything right now because it's not super obvious.
Right. Yes. And so, as I said before we started the call, like I know some of my biases and some of my patterns from the past. Like for me, I love it when volatility kicks up because it feels more fun. And I'm good at trading volatile markets. And so I dive in. And as volatility starts to come out, in the past, I've been slow to kind of take risk off the table. Um, and now, I've added this new thing of feel, called intuition, call it felt knowledge, unconscious pattern recognition. But I've really started listening to that closely, and that, along with, I look at the same charts. I've looked at the same charts for a long time.
Yeah.
So, you know, um, when that voice whispers to me, I've gotten much better at taking those trades. And it still feels, even though I've been doing this for a long time, it still feels a little like guessing at times. And so
Yeah.
I just really have to lean into that and say, okay, is this a time when, whatever, a couple days ago to get short NASDAQ, or actually a week and a half ago? Yes, I didn't listen to the voice to take the short off, and I took some off and got stopped out of the rest, and then got back in, I think yesterday, because of that voice that said, try it again. And the other aspect to that is that, to me, in my mind, I had a clear risk level, and it was well within my parameters. And so when I have that, okay, here, if I get stopped out, that's part of the deal. So I've done a much better job at listening to that. And, combined with that, as I listen to my intuition, my impulse kind of sounds much different. So the impulsiveness of, sell more, sell more. It's going down, sell more. On the floor, that was probably the right move. Um, Off the floor, it depends. But for me, the way I'm trading now, or certainly after this move, I'm not going to do that. And I'm kind of recognize that that's my pattern of, I love it when it's fun.
Yeah.
And on the floor, I could get away with that because I had an edge. I had the edge, so I could have a lot of fun and make money. Off the floor, edge is less, so fun has to be less. I know that sounds strange, but
Yeah.
that's kind of how I've kind of conceptualized it in my mind. It's more of a plotting type of thing rather than the excitement of screaming and yelling, right? Like I could scream and yell at the computer, nobody cares. On the trading floor, I could scream and yell and influence some things at times where I could, you know, uh, push a bid, push an offer, get some people to, kind of do some other things. And the other thing too that I've kind of learned over time, this is a little bit off the question, but I think germane, is that the skills that I developed on the trading floor, I thought I was a buggy whip maker, but I think they're transferable to what I do now. And the feels are a little bit different. Like the guys around me, I could feel what they were going to do.
Right.
Um, and I've learned to try to feel them. I've learned to feel the market a little bit like that. It's much different, but and again, that's why the intuition has started to kind of come in more, felt knowledge or whatever you say, for me in my trading.
How do you think people? Oh shoot! Just wrote on myself. How do you think people should better? Because I feel like the whispers just they come from experience, you know. Because like a younger trader, they're gonna get whispers too, but it often is. It's not their whispers, you know. It's the market whispering at them. Do this, like, come on, it looks so good, you know. And those are the
Mm-hmm.
exact whispers you don't. It's almost you want the opposite whisper there. Like that looks so enticing that like this may be the spot to like go against that, right? And
Mm-hmm.
there's this like tipping point at a certain point where like you probably have learned a lot of the base level skills. You've seen a lot of stuff to where that those whispers now become a little bit more authentic and more important, right? Anytime you get a whisper to short the NASDAQ of all things within your risk perimeters, like it's like it'd probably be a lot tougher to listen to that whisper if you're just in the middle of no man's land and there's not like a chart that also like kind of makes sense for your risk, right? There's like got to be maybe that extra layer that helped you short there because you were like, oh, I have a kind of defined area where I'm quote unquote wrong in this idea.
Mm-hmm. Mm-hmm.
But yeah, do you have any suggestions for people like to when do those whispers? When are they more powerful and when are they not? You know what I mean?
Yeah, absolutely. I've been thinking a lot about this for a long time, but recently it's kind of kicked up where I think intuition in the way we're talking about it is earned. And so it's time in the markets, time doing what we do and whatever specific structure we do it within. And then I think within the context of that, paying attention to how we feel. Once we're able to trade an idea, method, strategy consistently, then that opens a door to then start paying attention to, all right, what thoughts and feelings are coming up. And one description I had that I learned from is I had a number of different things, but one of them was I would go through my charts and I would get a feeling about long soybeans, whatever. And then I would just catalog that. It would be a quick look. I'd click on the chart, just kind of look at it, go to the next one, look at it. I remember the soybeans the second time through, and that meant that I had to look at it more closely or carefully. And for me, when I would look at it and my intellect would kick in and tell me 15 reasons why it wasn't a good trade, that's a trade paradoxically that I needed to take.
Hmm.
And so the way we develop it is being able to do something consistently, I think is important. And then develop that, second level or nuanced approach of, all right, here's what the rules say, or according to Hoyle, but what's going on there? And I think that's an additional edge on top of the edge of the trading system. And interestingly, the one that happens in that no man's land that you talked about, if something came up for me, at this point, the intuitive voice and the impulsive voice sound different to me. But the impulse is the one that says, hey, come on, do it. It's going to get away from you. You got to do it now. You got to do it now.
Right.
And the other one is, hey, this is a good spot.
Yeah.
And if you don't listen to it, it's gone. And curiously, the people I've worked with, the ones with the least amount of experience are the ones that are convinced that they can have the intuitive. They're always searching for that. Like, again, it's the Holy Grail type of thing. And, some PMs, they and analysts, I think the ones with experience do have a level of this that they just don't talk about or recognize because it's kind of taboo maybe at times. But when we start to really talk about that and develop like what is their intuitive edge, they really start to expand, their ability to kind of lean into that. And it's practice. It's practice. It's doing it over and over again.
I feel like it all comes back then to this idea of like feeling yourself in a specific moment as quickly as possible. Because if you have that moment where a voice is speaking, but you're in a place where you can listen to that voice and be able to say like, oh no, that was just a little bit of an urge. That's a little bit of me scared. I've been bored.
Yep.
I'm looking for something. Like markets are moving. Like that was an urge, as opposed to like I feel good. That came out of nowhere. It's kind of weird. I'm not like trying to chase money right now, but like something just kind of pointed
Hmm.
something out there. That one feels a little bit more realistic to me, a little more phantom, you know, maybe experience or something like that.
Yeah.
And and as you were saying, like the soybean example, it makes me think like the 14 reasons that you shouldn't take this trade are the things that most other people are thinking about.
Yeah.
True, right? So can you take a good risk reward scenario where the things everybody has already been thinking about, maybe that move has already happened and they're just the ones pushing it towards the tail end of that move,
Hmm.
you know,
Hmm.
likely to make the mistake of thinking like everybody else.
Hmm.
Um, that's definitely something I've kind of thought about a lot more is like is this whole I've been big into this idea of narrative compression recently where
Hmm.
like narratives are switching so fast and like you know if the market ends up on highs today and goes up 1.5% by the end of the day, like the world's not going to be ending. You know what I mean? Like people are going to be like, yeah, of course there's support at 4,200 in stocks and like, you know, whatever. Like all it takes is like one day now, and everything changes. So I'm really trying to be more cautious lately on like, am I following the consensus here, or am I on the tail end of what's just going to change in the next week? And I
Hmm.
feel like that's one of the biggest games being played right now. Um, and it's getting a little more scary too because this like false information that's coming out, like take the hospital bombing a couple days ago, right? Like that came out and got reported by all of the big news things in a certain way, only to be found out that it was the complete opposite of what people thought happened an hour later.
Yep.
And when you're talking trading big size on a squawk or something,
Yep.
that could
Right.
be so like it's like weird because like how do you take advantage of being first to a squawk, but like not knowing that it's real or not? Like it's just this constant story switching.
Yeah. And that's part of the game that probably is different now. Whereas, 10 years ago, that was a big part of the game. And if you were early in that, I remember when Twitter first came out, one of the guys is like, dude, you got to get your tweet deck up and set up
Yeah,
and you probably did that too. And,
yeah.
that was an edge. Then it's no longer an edge.
Right. So it's like I actually think that's why technical guys have been doing well recently,
Yes.
is because they're able to just be like, fuck all that shit.
Yeah.
Um, squiggly lines, this makes sense, support resistance, shut up, right? And it's allowing them to step back from this compulsive narrative switching.
Hmm.
And also you have choppy markets that like, you know, policy and all this blah blah blah.
Hmm.
So it's actually really, I think, beneficial for technical people right now,
Yeah.
which is kind of interesting. And I also wonder if moving forward it's going to be that way, or if it's
Hmm.
going to like at a certain point to me, narrative compression, just like anything, will explode back out in a weird way to where that won't be the case, and we'll have long trending markets again at some point, right?
Yeah.
Like where there
Hmm.
aren't as much choppiness.
Hmm.
So yeah, trying to think about where we're at. Like you were saying, one of your flaws or maybe aha moments in learning was not quickly recognizing enough when volatility was like compressing back down again.
Hmm.
Um, and yeah, like it's like the give back period, right? Like maybe you
Yeah.
did really well and you're like, oh, I fully expect I'm probably going to give back 20-30%
Yes.
before I realize, right? And that's a big one for a lot of people, right? It's like crypto is a good example. It ran up like crazy. It's like, when can you really throw in the towel and be like, okay, this has changed. Like things are different now.
Yeah.
Um, yeah. So anything to say on that part, or any other things you learned along your way with Denise that were aha moments for you?
Yeah. I think this idea of conviction or confidence, um, I think, is important to a degree. Like, you have to have a level of conviction or confidence to take a trade,
Yeah.
right? Like some people can't take trades. Never my problem. I need to trade less. And so this idea of having a structure that you can be convicted in, but also then because you have this structure, when the opposite happens, you're not, sitting there and buying again and buying again and buying again, and that. So you're because there's a strong structure. I think the best traders are able to be very confident, but also switch their mind or change their mind very quickly. And that's what Dennis Gartman, I don't know if you know Dennis Gartman, he was a newsletter writer for a long time. Gartman would write and he would change his mind a lot. And people hated that, hated it. And to me, I was like, of course he's a trader. Of course he's going to change his mind. He's not going to have the same opinion forever. And to me, I think that flexibility, to be confident and then change your mind because things happen, right? There's a Maynard Keynes quote about illogical versus liquidity. Like, markets can remain illiquid longer than I could have enough money to trade it effectively, is what it says. And so I think having that balance, and a lot of people don't use stops because they're afraid of getting stopped out, which, I've worked with this guy for a couple of years now, and he's turned into a very good trader. But initially he would have a kind of an idea, and he would, buy into it and then wait. And he would spend all of his time watching this thing that was underwater, that was too big with too much risk. And he's one of the lucky ones where he was able not to lose all of his money doing that. And then he came to me, and he's a totally different trader now. I mean, totally different. When the market goes his way, he's got a very, very keen idea of what he's doing, the time frame he's doing it in, when it's working, when it's not, when to get out, when to stay in. And it's just remarkable to see him change in the way he thought, because he showed me a series of charts a couple years ago. I forget, he was short or long. He wanted to be short or long during this period, and he was right in his idea, but his execution was totally messed up because he was getting short at the bottoms, and then when it would retrace, he couldn't take it, so he would get out. Right. And so he started to switch his mindset around that. And again, some people are breakout traders, some people are mean reversion traders. Good traders trade both, but we have a bias, and we need to understand that bias. And that's part of creating a system. Like for me, I'm more of a breakout because I like excitement, breakout trader, right? Mean reversion, picking bottoms to me is fun, but I usually butcher it. And so I know that now I'm starting to develop a way to try to trade that kind of mean reversion trade. But I have to understand my bias as a person, as a trader.
So two things. One, you mentioned stop out stuff. Do you think the real question in that like he didn't use stop outs, or for anybody that doesn't like stop outs, like the real question is, why are they afraid of getting stopped out? Like why? Is it because, I'm guessing it's most people don't want to be left being right but not in the trade? But like at what point and is it because, like, if it goes wrong, other people are still like in your original idea and you're not the only one losing? Like, what's the real reason that you won't use a stop? I don't get it, right? Like, I know it's different for everybody, but that's just an interesting question. I like using stops because I don't like the idea of losing a lot of money, because I know where that takes me mentally, and it just runs me back down the catastrophization mindset, right? So stops just consistently allow me to create a little story. Oh, story was wrong. Next story. Oh, story was wrong. Next story, right?
Sorry.
No, go ahead. So I was going to say, do you see any consistencies there with why people don't like using stops?
There's a lot. There's obviously, it's a nuanced question, but generally I think people, a couple things. One, it's not fun to be done with a trade. People want to be in trades. If you're, this narrative of I'm a trader, if I'm not in a trade, I can't make any money, which is only partially true. You have to have good trades to make money. The other idea is, oftentimes you hear about, well, big traders, really successful traders don't use stops. And
Yeah.
I actually don't think that's true. Like, Paul Tudor Jones may not necessarily have a hard stop in, but he's not an executing trader. Like when he decides to get out, somebody else does it, and he holds them to the average or whatever it is.
Yeah.
And then there's this other aspect of things of um, I've experienced this where I've gotten caught in a trade. Like I think that's a misnomer. If you're caught in a trade, you made a mistake and you need to just get out. But I've been in trades where this strange thing happens where I my mind switches and I say, fuck it. I'd rather lose all my money than get out here. Now, thankfully, that doesn't hang around. I used to do it. I don't do it anymore, thankfully. But it didn't hang around long. And that's the idea. You hear traders all the time. I got out at the absolute wrong time,
Yeah.
which is nonsense, but it feels like it. And so
Mhm.
again, it's really understanding the feels that really are the worst for us. And in the moment, projecting out, okay, how will I feel if I stay in this trade and it goes down another 100 points? If I get out of this trade and it goes my way for 100 points? And trying to work through those feelings is the kind of the first step. Really, obviously, kind of what you're saying is we need to do it before we actually get to the point where we're taking a massive hit. Um, but I think a lot of the retail traders that come to me, I've heard this story a lot where they start out with a $10,000 account, they run it up to $90,000, and then they give all of it back.
Yeah.
Well, I mean, so for me, that says, okay, your risk was out of whack from the beginning,
Mm.
and you had a sample set like Nassim Taleb talks about. You were just in a perfect sample set for your trading style, and you made a ton of money. And professional traders, they don't fire, like
Yeah.
you know.
Yes. It's like, um, yeah, 90,000 and then they lose it. Like the there it's almost like the situation where you almost wish you didn't win it, right? Like
Yeah.
in a weird way that it ruined everything in that moment, sadly. Where you'd
Yes.
rather hear the guy that went from 10 to 12 to 9 to
Yes.
14 to
Yes.
12 to 15,
That's
right? Because
sustainable.
yeah, and that's the guy you want to invest your money in, right? Like
Yes.
if you had to choose, not the dude who was like, dude, I turned 10K into a 200K last year or whatever, right? Um, and then so like when this will roll into this next question here from what you were
Mhm.
saying is like you have this process, you have this strategy maybe you use, and you had this 10K account, you ran it up to 90 because this strategy worked like 6 times in a row, and you're just
Mhm.
like, this is great. But then obviously that strategy doesn't work once, then it doesn't work again, then it doesn't work again, and then you blow your account because like, fuck it. Isn't it hilarious how little 20,000 would feel after being at 90 from being at 10?
Oh yeah. Hmm.
It's insane, right?
Hmm.
Like
Hmm.
the new like barrier or the new mental floors you set for yourself. I deal with this, and it's one of the reasons I hate risking a ton. Is like I can't deal with that. Like I do it too. I know I shouldn't, but like I set that new floor, and I'm like if I
Yeah.
go way below that floor, it's funny. But like okay, so like he has a winning strategy, and then that strategy sucks for a while. When do you admit that your strategy might just be an issue? You know what I mean? Like how
Hmm.
long are you supposed to stick with these strategies? Like how can you tap into yourself and ask yourself the right questions to know like, oh, this just isn't working anymore, and I have to sit back for a second and take a big look at what I'm doing.
Great question. And to me, the first thing that I always look at is risk. Um, a lot of my clients, especially guys who are more of the retail type of clients, hear me talk about risk all the time. Like risk is so important in what we do, and the main job of a trader is to be able to do it again tomorrow, full stop. And if you're risking way too much, which again, there are checkpoints, but if you're risking 20% of your total account value on one trade, probably too much. Now, again, some people can do that. I don't know any of them, but some people can. But like you said, when you get six in a row, you don't learn the lesson of risk. You learn the lesson of, you know, just trading at a high level of risk. And so for me, it's always about, okay, tell me about your trade size. How much did you make? To your point, did you double your account in 4 days? To me, obviously, there's too much risk unless somehow you have Citadel, giving you their algo, right? Like, it just doesn't
You
happen.
don't? I
Yeah,
have mine.
exactly, exactly. So to me, usually the first step is that idea of risk, and then it's okay. Do you really understand what you're trying to do, and can you tell me what that is, without a lot of maybes and this time. And that's one of the things that I've noticed with people who have trouble being consistent is there's always a changing thing. And so for me, I like this idea of having a strategy and trading that strategy. And Van Tharp had this super trader program where you had to trade it like 95% before you can graduate from his program.
Mm-hmm.
God rest his soul. And I like that idea, because until you can do something consistently, the back test means nothing, because you're not testing the same thing. So
Yeah.
doing it consistently is step one. Excuse me, risk is step one. Doing it consistently is step two. And then we could start to really understand what's going on. Typically, it's one of those two things. There's no real consistent strategy, and there's no risk control at all.
Interesting. It made me think of when you would meet a retail poker player. If you were to ask them, hey, run that hand back to me. Tell me about that hand. Within 10 seconds, you will absolutely know, like, okay, that's no. Like, they'll add in I was feeling like this guy was doing this thing, so I thought this time I should do, and that's away from the strategy of like, no, I had a good hand in this position, so I did this.
Yes.
Right? Like a professional poker player that's confident in their game will tell you the entire hand exactly how it happened, even if there are blaringly obvious mistakes in it.
Yes.
Because that's just how the hand happened. Same with a
Yes.
trade. It should be very clear cut, like what you were trying to accomplish. What was your initial risk? What were you hoping for? Whatever. We don't need the the VIX was expanding, so like the range was changing, and I felt like there was a sell. Like right there, you probably lost it, and you're like, well, this is why this is probably part of the reason your strategy isn't working anymore. It's changing. It's morphing.
Yes. Time frame changes or creep is a lot of that too. Like, talking to a guy who's trading on a 30-minute time frame, talking about the weekly or monthly chart. Like,
yeah.
And again, it's not, if it was a specific level, they could show me and say, all right, well, there's a lot of support or resistance, whatever, here at the weekly. So I was using that as kind of a lean. That's different than, the weekly was still down, and like the weekly has nothing.
Right.
It's a long way away from the 30-minute chart. And so
like if there was confluence with the 30-minute and the hour and the weekly and the monthly, like then it's maybe relevant and great addition.
Yes,
but
right.
if it's like you came in with a mental idea of like you're trading the 5-minute chart, but then the only way that keeps you in the trade is because the monthly chart looks good too or something. It's like to me, it's actually like what we worked on. This was one of my findings was when I start moving my stops, right? Like, and it'd be very minor. It'd be like a couple ticks. I'd be like, well, this order looks better to put my stop on because it's a little bit bigger and it wasn't there before. And then like it's giving me a little more room, and maybe I'll move it to there, and I'll be like, well, I'll just risk to like the day's range. It's a long day, and I'll just hold it longer now. Well, now I'm at a completely different trade.
Yeah,
and I didn't approach it that way. So it's one of the things that we worked on, guys, is for me personally is when a signal for like me to kind of step back for a second was if I catch myself moving stops, like something's up. It's like a red flag for me, I'll be honest, there are some times when moving stops, they work out, right? Like, and often, maybe sometimes it'll be I'm having a good day and I'm moving some stops. That for me is almost like when somebody's running so hot that like their mistakes aren't even mistakes, like I still think it's an error, and like the professional in me says like, no, you're getting away with it right now.
Mhm.
Everything's working right now, so you're kind of getting away with it. But even if I'm winning and I'm doing that, I'm like, wait a second, like it's a good check-in process for myself.
Yeah, and again, understanding our biases and patterns is really important. And then for me, the next level is really diving into that and saying, okay, when I moved it, what was really going on? Why did it work? Did I just get lucky? Is it just random? And over time, we could start to understand, like, oh no, I really felt X. Like, it was at the moment, and there's a consistency to the pattern of the ones that you move at work. But generally, and we need to get very specific about what the pattern is.
Yeah. Generally, I was very annoyed with hearing my stop out sound. So I'd give myself more room to be right
I
because I was
love
just sick of losing, right?
that.
Like I have
Mhm.
an audio alert. I have it muted right now, but like, whenever I get stopped out, I hear a like big laser beam. You know what I mean?
Mhm, mhm.
And as a trader, you get so frustrated hearing that laser beam,
Yeah.
because it's actually the same for getting stopped into a trade for like a
Mhm,
breakout. So
mhm.
sometimes it's not bad, but like
Yes.
normally I'm like, I hear that sound and I'm like, oh,
You know
Jesus.
which is which, even though they're
And
the same. Yeah.
yeah, and when I get overwhelmed on like a losing day or something, I'm just like, I don't want to hear that anymore. I'm sick of losing, right? So
Yeah.
if I'm moving stops and I'm feeling that, probably a little bit different. Than if
Feel it in
I'm
my body.
doing
I feel it in my
fine. If
chest.
it's different though, and I'm not really like losing and I move my stop because I think there's actually a little bit of a better spot to put it, completely different story.
Yes.
Um,
Good.
the difference between the two, and
Yes.
so that's cool. It's a cool realization. And again, though, without being kind of skilled after more skilled after time of being able to ask myself those questions in the moment. Um, Again, all feels like it comes back to like how fast can you kind of feel your feelings in the moment,
Mm. Mhm.
um, rather than being like an hour late and thousands of dollars less.
Yeah, when you were describing that, I felt the heaviness in my chest. Like, I know that feeling of hearing that sound and being like, "Oh shit, I knew it,"
Yeah,
and getting stopped out of a trade, and yeah, getting and it's a process. It's I sometimes I think about it as kind of this timeline, and as we become more aware, it's the first step is in an hour we say, I did it again, and then we slowly walk that back until the moment the feeling we recognize the feeling, and it gives us that time to react, and we can make a different choice. That's what we're really trying to do. We're trying to use our thoughts, feelings, and emotions, bodily sensations as well, to give us the opportunity to make different choices. Now, sometimes we're going to choose the same choice, right? Like
yeah,
sometimes I don't
doesn't
want to.
matter sometimes.
Yeah, right. Sometimes you're going to say, "Fuck it, I'm doing
Yeah,
it anyway," and
mhm,
you're going to I'm going to get stubborn and do it anyway. But
yeah,
at least then we recognize there was a choice, and we just chose not to listen, and that's part of the prerogative too.
yeah. It's interesting. I had a quote that I wrote down, or not a quote, but it's this guy that I've only come across recently, Kapil Gupta. I'm sure you might have heard of him by now because
Name rings a bell somewhere. Yeah.
he's worked with a lot of like golfers, like PGA Tour golfers.
Ah,
He's like a performance mindset dude. Real interesting podcast. I'll have to send you some that I've
yeah.
listened to, but he's kind of one of those contrarian dudes. Like the standard things you might hear, he'll be like, "Yeah, that's a fallacy." Like that. No. So the one that he talked about was the word performance and how often performance to people is a goal, and
Mm,
to him, performance is just a symptom of doing the right things. And like, people have these little things when they're trying to perform or they're trading or they're playing a sport or whatever, where they're like, don't do this thing or like, don't make this mistake or try not to do this. And he's
mhm,
basically like, the more you are attacking those problems, and like, the more you're going to be thinking about them and the more likely they are to happen. And his whole thing is like, um, mindfulness, like the ability to just recognize all of the things in the moment that are happening, not trying to eliminate thoughts or trying to
Mhm.
eliminate problems, but
Mhm.
to see them for what they are, see the experience for what's happening now. And in that sense, along with proper training and regiments and all that, performance will be a symptom. Success will be a symptom of that. So, what
Yeah.
do you think about the whole idea of like mindfulness in general and the ability to kind of, be aware more of what's happening in the moment?
Yeah, I think I agree with the idea of being aware in the moment. Um, and mindfulness is kind of a catchphrase that has certain connotations. But what I really try to do is try to understand. And to me, the don't. Well, why not? Why
Hmm.
not do that don't thing? Understand. Like, I don't want to hit it in the water here. Okay, that's obvious. But why? Like, what's the fear? Um, and to use a golf example, I told you I played in the tournament with these guys. It was just a fun thing, but I'm serious about when I play golf. And down the stretch, I hit some fat shots that in the past would have derailed me. I would have been embarrassed and angry, and this time I just said, it's a bad shot. Like, that's, and I hit them in a row. So my psyche was really testing me to say,
Hmm.
all right, you say you can recover from this. Here's three bad shots in a row. And again, like, so what did I do? I got up on the 18th hole. I was in this match, and I just got up there, and I'm like, just hit it hard. Whatever happens is going to happen, and I ripped it. And for me, it's about really understanding. Like, in that moment, I understood, huh? I would have been really embarrassed and attacked myself 2 years ago, but now I didn't. And why is that? Because I've done a lot of this work. And so I'm able to kind of recognize that, oh, yeah, I should really feel badly about that, but I don't. And I'm just going to hit the next shot. And so for me, this idea of performance and goals, it's, I really think it's about understanding what we're trying to do and why. And, understanding the history of that. So, why does that matter when I oftentimes what happens is in these moments where we have intense feelings, and for me, the intensity of a feeling gives a lot of information. So if the intensity of a feeling doesn't quote unquote match the moment, for example, you get cut off in traffic, and only speaking of me, I want to drive the guy off the road one day and the next day not. So there's a difference there.
Yeah.
And it's about my history. And so for me, when it's super intense, I have to say, I wonder what from the past is being superimposed over the present. And I really need to untangle that. And, in performance, in sport and trading, a lot of it, has to do with our past, seeking approval and not wanting to be, a disappointment to some people. Everybody's slightly different, but really understanding the uniqueness of the fingerprint of our emotional, complexion, I think is really where it's at. These blanket statements are great and they help everybody a little bit, but really understanding what our personal patterns are is where the kind of that last level of growth for somebody who's at the top of their craft. And, for me, it's more about the process than the result. And again, the result matters, right? We can't
Yeah.
say, well, I'm losing money every day, but it's really about the process. No,
No.
the, the result matters.
Try
But
telling that to like a guy you're running money for, right?
yeah, right, exactly,
We're
exactly.
down like 50% this year, but the process is great.
Yeah, I feel great about myself. Like, no, that's not, and the reason I go there is because high performers are always driving themselves hard. In fact, they usually have the opposite problem. And I had this a little bit too when I started with Denise, and I hear it from my clients is this idea of, well, what do you mean I'm going to give myself a break?
Mm.
I can't do that. Then I'll sit around and do nothing. I'll be on the couch eating potato chips all day long. I have to abuse myself and give myself a hard time. And
Yeah.
it takes a while to show ourselves some grace and compassion. And, again, oftentimes the thing we are most afraid of is the thing we are least likely to do. So there's very little chance I'm going to sit around and do nothing and just eat potato chips because I'm having my understanding my feelings and emotions.
Hmm.
But, part of me was afraid of that. And
Yeah.
the way I think about it with psychoanalysis is those are resistances. And and the way I work with that with clients is that um, we need to honor it and work through it. Some people cannot take a compliment. Um, and in fact, it feels bad to them. And oftentimes I'll say, I know this is going to be wrong, and you don't deserve any compliments, but that sounded okay to me. And then they would start to argue with me. I'm like, oh yeah, you're right. I was terrible.
Hmm.
And it's just working through that process of hearing that. And again, to me, that shows me, okay, the internalized voice from the past is influential. And that internalized voice, as we start to, at least my experience with clients, is as we start to understand what we feel and what's going on, the chatter in our head goes way down.
Yeah.
And for me, the last part of that is, part of that internalized voice was my dad's voice, and my dad's no longer here. So giving up that voice was very hard because it felt like I was giving him up.
Mm.
And so again, not to get too deep, but these things
You
are
already did. You went there. So
very, very, very nuanced and very layered. And
yeah.
that's just what the psyche is.
How did that show up in your trading? I need to take a break. Like go go go. Suffering is good. Like how did that show up in the markets for you? Over trading? Like
Overtraining for sure, for
yeah.
sure. I remember one day I decided that I was going to tape read a few days. Unfortunately, I was going to tape read crude oil. God damn, that was fun, but I lost a lot of money.
Mm.
And so then I'm like, it took me a while because I'm a little hard headed, but and this was earlier in my journey that probably wouldn't happen now. But unfortunately, we need to learn our lessons. We need to learn the lessons that we need to learn. And sometimes those are hard lessons.
Yeah. And it's often hard to like um accept what is your problem, because I feel like logically like often guys are very very logical. They're emotional and then they're logical, so they're like, yeah, that could be a problem, but like, nah, that's not a problem, like I'm doing the right things. But like really deep down, like they just won't allow themselves to realize it's a problem. Like
Absolutely.
something we worked on for a while was like I'm afraid of losing in general, like,
Mm,
and why? uh well, I don't want to go broke because I don't know what else I would do. Okay, then what? Like I would have to admit to my family that like this path of poker and trading and everything was stupid, and that you guys were all kind of like, you guys all knew better, right? And like
mm,
I'm not living a better life or anything. Like all of that wraps up into like a couple extra stop losses a day will bother me, right? And
yep.
it's all like, and like I said, I catastrophize things. So like once I start to get that, and I've talked about this before, I get very heated, like physically heated. So
Hmm.
if I start to feel the heating and the hate losing and all that, I know that a lot of that is wrapped up in there. And now I'm able to then pull back the reins quite a bit and just stop for a while. And one thing we talked about was shadow boxing, where
Mm,
like, mental trading, if you will, for the next hour or whatever it may be, for you to be like, okay, were those mental trades like good trades, or were you just what would have happened to those trades, and were they good trader James, or were they scared of losing, he
yeah.
did mad James? And if it was good trader James, like, okay, maybe we step back in now and we're good to go. But if it was the
Yep.
other one, it was like, okay, like I'm just not ready. And from there we kind of got into this risk spectrum thing, where to me, if I was on far end of the side of like calm, cool, collected, not really being bothered, stop outs galore, doesn't matter, like things are good, like fire away, like trade, size up, and do your thing. And then there's the opposite of that where I'd come in every day and it took me like one stop and I'm triggered again, you know?
Yeah.
And that would accumulate over time. Like it would accumulate. It wouldn't be bad. It wouldn't be bad. It would kind of be bad. It would kind of be bad. Then it would get bad.
Mm.
And it's like I go through this process and I'd realize I'm coming in every day. And after like one or two trades that go wrong, I'm just full blown gone again,
Yeah.
you know?
Yeah.
And trying to recognize where I am on that spectrum at all times it's not easy, but I've gotten much better at it because of that, right? This has been a struggling year, but I haven't punished myself P&L wise. It's been a lot more break even than
Mm-hmm.
losing. And I know if I was 4 years ago, James, I would be down a ton of money this year
Mm-hmm.
because I would be coming in every day saying like in a good way, saying like, I'm just being intense. I'm being
Yes.
competitive. Like I'm going to make
Yeah.
it back. But that's the bad version of James. I don't want that. That's not the James that makes a bunch of money. That's the one that tends to just spew off money, right?
Mm-hmm.
But
Mm-hmm.
admitting that is hard to do,
Yeah.
right? Because you want to just be able to say like, I'm just intense. I'm competitive. Like I want to win, so I'm going to keep firing. I'm not going to like give up. Blah, blah.
Mm-hmm.
So like, there's an ego, thing wrapped up in it as well. It's just interesting, and everybody has that issue somewhere along the lines.
Yeah. And to your point, it's hard to see that for ourselves.
Yeah.
And it takes somebody who can listen without judgment, which is really hard. Somebody, it's hard to realize these kind of areas that we need to work on unless we have somebody else who can show us, not tell us. Like if I just would have said, James, this is your problem.
Yeah.
But exploring it, asking questions, and really having me or you or whoever the client is come to the conclusion, because again, it's not my job to change anybody. If somebody really feels good and feels comfortable losing money and trading poorly, it's not my job to change that if they need that for some reason. I know that sounds crazy, but
Yeah.
really what my job is to help people understand themselves better. And when that happens, the expression of that in the markets becomes better.
Mm-hmm.
When we become self-aware. And it takes, I think, and again, I'm talking my book here, but it takes somebody who's outside of ourselves, who can listen properly and ask questions, not kind of make declarations.
Yeah.
Oftentimes when people ask me for my opinion or advice, it usually leads to another question. And I'd rather hear the client's idea of the solution to the problem they just asked me about than tell them what mine is, because mine doesn't matter. We need to figure out what theirs is. And that's the
Right.
beauty of what I do. I love it so much. It's such an honor to work with people.
Yeah. It's got to be pretty cool. And yeah, if you were to just explicitly, like if it was obvious maybe what somebody's issue was and you were to like, let's just say you knew and you told them that, like a lot of traders are similar maybe mindset, and they're not going to they don't want to believe you. They're not going to let you, like there's a wall there for a while, right? So it might be faster to navigate them to their own answer,
Yeah.
because as long as they came up with that, it's a little bit
Yeah.
easier than
Yes.
being told that.
Yeah. Because a lot of people were told what to do growing up. And especially a lot of traders don't like authority, right? Like
Yeah.
I hate authority. I hate
Yeah.
people to tell me what to do. And
Mhm.
as I've gotten better at hearing that and understanding that, I recognize it more. Like in my classes, if the professor says something and I don't want to do it, I say, I don't want to do that. Part of me doesn't want to do that. Now,
Yeah.
I don't really have a choice, but part of it's being able to express that. Or in my PT, in my workout in the morning, I remember I hurt my knee one time because I pressed it too far, even though the voice in my head told me not to. Then the next opportunity, we're doing push-ups or something, and the leader was giving me a hard time about, this girl's dominating you on these push-ups. And immediately my mind said, come on, you got to push harder. And then I'm like, I'm not going to get hurt. That's ridiculous. Good.
Yeah.
She's doing push-ups better than I do. And so that transition from being totally committed to, being the best and always having to, push and compete, and to being sensible about what I'm trying to do is a huge, huge
Mm.
transition for me. And it comes from understanding what I feel and why, and understanding that part of me wants to beat my head against the wall and feel that displeasure. And there's not a need to do that as much anymore. So I'm able to say, nah, good. She's amazing at doing push-ups. That's amazing. And I'm
Yeah.
going to do what I can do.
And if you recognize that shift in those situations, it's probably happening in your trading as well,
Oh, without a
in a
doubt.
in a certain way, right? Even if it's not obvious. Maybe being like, oh yeah, that move happened. I missed it. All right,
It's
cool.
actually more obvious in trading for me.
Yeah.
Yeah. Yeah. Because these subtle I express myself through my body. And so when I'm able to kind of understand that I don't have to do these things, the trading aspect of that feeling feels more intense to me.
Hmm. Cool. Well, look, I got through a couple things I wanted to talk about, but it's already been an hour, so I'm just gonna wrap it up here. Why don't you give people a little idea of like maybe how they could get in contact with you if they're interested?
Yeah.
Can't guarantee anything. I'm pretty sure it's only my mom listening. Actually, she doesn't listen to this, but yeah, just run through that, and then we'll wrap things up.
Absolutely. So what I do is I work individually most of the time, some groups with high performers. And the best way to get a hold of me is jpb at thethinkgroup.net. I'm on LinkedIn and Twitter. I think JPB800 is my Twitter handle. I have a Substack at John Burns. There are some articles in there about some experiences with some professional athletes, about the yips in golf, and about how we can use our emotions and feelings to make better decisions and to perform at an optimal level. And again, we talked about performance earlier. I think performance is just part of what we do as traders. And anybody at a high level, I think, focuses on that. So, yeah, feel free to reach out. James, it's been a pleasure. I always have a good time talking with you. We talked about a lot of things. Hopefully, it's helpful. Anybody can reach out. I'm happy to have a conversation with anybody about what I do. I love it, and it's an honor to do what I do with my clients. So,
Yeah. And I highly recommend it if you're a trader and you're kind of reached a level where you have a little bit of money to kind of really invest in yourself. I would give it a try because it's a different side of things rather than just investing in, a technical trading course or buying some books and stuff like that. It's really going inward. And I feel like down the road, it'll pay back dividends like that are hard to see on the front end. But yeah, thanks for spending the time, and we'll chat soon. Good luck out there on the golf course.
thanks. You too. Appreciate it.
We'll see if I can figure out my broken back first.
That would be good. Thanks,
All
James.
right, John. See you later.